Joining me now is Katie Hubbard. She's Executive Vice President of Capital Markets at Walton Global. Katie, it's great to have you on the show.
Thanks for having me. Great to see you.
And of course, your expertise largely in the housing space. We've had a lot of housing data points to consume of late, probably most notably the new home sales, of course, out yesterday at 10 a.m. Eastern. What do you see in terms of the health of the housing market right now?
Yeah, so Walton, we provide land to public home builders, and so we're seeing firsthand that home builders are still very bullish on housing. They are having to offer some incentives to keep the volume going, but new home sales were up 5% over February 2024, so still very strong numbers being reported on home sales.
Interesting. We have seen some data that consumer sentiment is starting to weaken and expectations of higher inflation. How has that impacted the housing space?
Absolutely. And so consumer sentiment being down is pulling people to the sidelines. They're not going to stay there forever. We're still 3.8 million homes short of houses in the country. So people are eventually will come back on, but just as we started to settle into the mortgage rates at the mid sixes, people were starting to feel comfortable. Market sentiment has really dropped because of all of the volatility that we're seeing in the market. But they'll come back once mortgage rates come down.
Let's talk about tariffs because certainly that could have an impact on the supply chain and prices as well. How are we starting to see builders and your clients prepare for that?
Yeah, so the builders, they're expecting anywhere from $5,000 to $10,000 overall on the end home price increasing because of the potential tariffs. Also, what's on their mind is also potential labor shortages with deportations. So tariffs are something that we've seen before and that they've dealt with, so it's not a big deal. But overall, across the building supply chain, expecting prices to be up about 6%. Just across all building materials this year.
Does that change affordability? Even a few years ago when inflation was very high and rates were on the rise, the affordability question between rent and owning a home really came into the crux here. How has that changed over time?
So the affordability is really going to have to be eaten by the builders. They're going to have to squeeze into their margins because every time you increase a home by $1,000, that pulls 106,000 people back to the sidelines. So just that entry-level home for the mass builders it's very sensitive on the affordability.
Trump's executive order to increase lumber to combat tariffs, what does that mean?
Yeah, so Trump has made a mandate for his team to look at 280 million acres of forest land to basically bring that into the United States for domestic production to bring costs down. But so that's one of the ways they're going to do it. But we believe that lumber prices will, settle back down by the end of the year.
Interesting. Now, of course, interest rates is a key factor in all of this as well. The Fed maintaining its expectation of 2 cuts to borrowing costs this year. Have we seen a change because of that in mortgage rates?
So what's interesting is people hear that the Fed is going to cut and they think that the 30-year fix is going to go down, but it's actually tied. The 30-year fix is tied to the 10-year Treasury. So right now we're at about 185 basis point spread. Typically, you're 170 to 190 basis point spread between the 10-year and the 30-year fixed rate mortgage. So we need the 10-year to drop to 4.14 in order for us to get rates below 6%. So really what consumers need to look at is for their 30-year fixed rate mortgages, like when will the rate, the 10-year come down?
And what is your forecast in terms of when you expect that to happen?
And so the difficult part is with tariffs, you have inflation, and the stubbornly high inflation that we've seen is really keeping the 10-year elevated. So we need inflation to come down to pull the 10-year down, to pull the 30-year fixed rate down.
Yeah, we are approaching spring selling season. Maybe we're in spring selling season. Of course, last Thursday was the start of spring. Doesn't necessarily feel like it here on the Northeast, but we can try to manifest it, Katie. How does that impact housing? What are you expecting for this year's spring selling season?
Builders are nervous with consumer sentiment down and people just, being on the sidelines. But for February numbers, new home sales were actually up 11% over the previous month. And if you look at a normal market like 2012 to 2019, home sales in February were 3.9 per community, and that's actually 24% higher than a normal market. So spring selling season is upon us, and the numbers are looking pretty good right now. But like I said, the builders are having to offer some pretty significant discounts and mortgage rate buy downs to keep that volume going.
Let's talk more about those builders. Some of them, of course, listed here at the New York Stock Exchange. You mentioned some of their strategies. What else could we see their approach be in this environment?
Yeah, so some of them are taking on, they're building smaller homes, adjusting to the demographic of people really not wanting a bigger house. People are having less kids, getting married later. So smaller homes is one of the ways that they're keeping the affordability in line. They're also doing like 3D printing, modular homes, prefab to try to really, bring down the cost where they can.
Katie Hubbard, such an interesting and wide-ranging conversation, of course, in the wake of a whole bunch of housing data of late. We appreciate you joining the show.
Thanks for having me.
Again, that's Katie Hubbard, Executive Vice President of Capital Markets at Walton Global.